TGIF, everybody. Hope everyone had a good week. Europound was my star call. Hi, Ren. Kevin, how are you? My trading warrior brother, Brock. Guys that always welcome me every morning. Look forward to your hellos. Alexander, how are you? Hugo. Didier, how are you? Everyone doing okay? Good morning. Okay, let's take a look around at the markets. Marco, how are you? Nice to meet you. Okay, so gold, right? There you go. All right, so, been talking about the 1760 being critical. Okay, so you could even see it a little better on the daily. I mean, we went right there. Could have broken out. Anyway, Blake talks about these kind of trades all the time. No matter what your bias is, when a market's near a breakout or breakdown, and you want to try a tight risk trade. I couldn't think of a tighter risk trade here. Yesterday, I was a little early at 1752 with 65 stops, and I've taken some partial profits. That's something else I want to talk about, and I think it's really important that people learn how to take partial profits because there are many trades that will go your way for a little while and then poof, it disappears. And if you don't take it and ring the register, it's not a profit till you take it. So, if I'm short gold and I have $5 to $10 my way, I'm taking half off the table. And that way you turn it into, you want to get to a no risk situation as quickly as possible. If the market accommodates you, the best way to do it is to take partial profits and tighten up your stops. Okay. So, it's still a good week. You look at it on a weekly basis, but, there is the other possibility instead of it breaking out that we could still have a breakdown. And I think a lot of this is going to have to do with the dollar. Dollar's holding the 92 level. It's had a pretty negative week. It's also about yields, and today you have the yen up, pretty good pop. Again, pretty negative week, failing from 1080. But look at this, we could blow again. Here's yields, 10 years up pretty good. We could make a new high in yields. So if there's another shot up in yields, there could be another shot down in metals. And in fact, when you look at the charts of gold here, look at that candle, and then look at silver. Silver actually, the rally wasn't as robust, was it? So I think Stelios is going to get his dream entry. I think 23 is doable down here. Maybe it'll hold up better than gold, but I still think there's a shot when I look at the daily for 1600. And it's simple arithmetic if you want to do it. So you just take the low here, 77. So from here that was about $85. $85 from here. It gives you a little shade under on a breakdown back under this double bottom. And when you look at it, what else kind of makes me bearish here? And this is multiple time frames. Can anyone see it? Although I do believe we took out the low here, there was a little divergence. Yeah, there's going to be a ton of stops above the market here and beneath the market here. Okay. USD Cad, is it a wedge? I keep adjusting my wedge line here on USD Cad. Now it looks like we're going to get, and I've been waiting for this. I missed the buy early in the week at 50% because I was looking for 61.8. Maybe there's a chance I'll get it. We'll see what happens here. Canada back under 560, I think, could give us that decline to 24.74. So oil, I'm still trying to be patient here with oil. I mean, look how long we've been sideways since the initial break. We've been sideways in oil for about 2 weeks. So, again, when I look at this, I know there are a ton of stops above 62 because we've tested 62 so many times. And if you're bearish, there's a moving average here. So, if we have any kind of follow through, I'd like to see some of the bears taken out of the crude oil market. It doesn't have to do it. If it doesn't do it, I may miss it because I'm not short right now. And if I miss it, you know what happens? What happens when you miss a trade? What do you guys think when you miss a trade? You had a view, you had a bias, you didn't pull the trigger and it happened. Great answers. Next. All right. Next. Next. Next is a key word for a trader. If you don't, yeah, that's what they wanted. Okay. Whoever they are. Probably OPEC, right, Forex gal? You conspiracy person, you. Yeah, okay. So anyway, next is a very important word as a trader. It's an important word in life. We all have chapters in our, Celios is an author. He wrote a book. We all have chapters in our life. Turn the page. Next. No looking back now. Next. So if you don't have that word, psychologically, it'll keep you balanced. And not only when you miss trades, but on a trade that didn't work, and also on a trade that worked. You shouldn't be breaking out the pom-poms and doing cartwheels on a winning trade. Where you want to get to is every trade, win, lose, draw. I'm not saying it's easy. I have emotions, but my self-talk is next. Okay. So I'm going to leave you with next as a key word that you write down and you look at it, and it keeps you moving forward instead of looking back. And who had a good week? I know that there were some great calls made in face for free for everyone this week. Anyone catch what was your best trade before I turn it over to Blake? Anyone want to share what their best trade was? Oh, good, Alexander. Okay, Monica. XRP, that's a EG Ren. Okay, Ren. Ren, are you a subscriber? Just curious. Long Euro, nice one. Okay. Okay. Who could name a trade that helped them in face this week? Anyone? Or maybe analysis. Maybe you were short cable, Andrew? Okay. And you know what else? That was a smart, good trade selection, Andrew. Okay. Great. So anyone that hasn't interested in stepping up and joining today? Okay, yeah, there was some money made on that. That made your week, Hugo? Beautiful. All right. So anyway, Friday's a good day to join. Gives you all weekend to navigate the site, take a look around, get used to all the different great edges you get by being a subscriber. Besides the analysis, everything here, your news feed, your live stream, you can have Twitter right here. So many tools that the developers, that the team has put together for you guys. A bias chart is your go-to idea. Okay, it's there's a reason why Blake did it for so many years and brought it back, because it does help people. So you guys know that we're all about trying to help you, but part of it is we also have to help ourselves. If we don't help ourselves, that goes for caregivers. If you're a 24-hour caregiver for somebody and you don't take care of yourself, you're not going to be able to take care of anyone else. So I'm just gonna say it. If you guys really enjoy what we do here in Face, the way to reciprocate, because we have to take care of ourselves too. You know, we're in business to make money like everyone else is, for you guys to join. Who's going to be the member today, the face attendee that's going to come out publicly saying, I'm going to join today? Come on, there's hundreds of you guys out there. Anybody? Jack, I thought you were already, you know, I've seen you around for a long time. You're going to join today? Oh, you already are? Okay. All right, Jack. You were just being a shill for me. It's okay. You know, it's okay. Good to have shills. Nothing to be sorry about. Okay. Well, don't waste my time. Okay, because time is our most important currency. There's plenty of things to do. Yeah. All right. So Blake, we made it to Friday. How you doing, buddy?
We did. TGIF. I just want to get past this Canadian jobs report that's actually
Okay.
out here in a little bit. Well, no, not. I'm not saying anything.
Oh, okay.
I'm just ready to get that out of the way and start off an early weekend. Well, I wish, but yeah, no, it's
well,
you
stick
asked,
around, Blake, for Charlie today.
What? I'm sorry.
Stick around for Charlie Gasparino today.
Oh, Charlie Gasparino is going to be here.
He's joining us once a month now.
Oh, he is. Okay.
Yeah.
Wow, that's awesome. That's awesome. Hold on. Let me go ahead and why don't you tell us a little bit why don't you tell us really quick, Dale, while I do this, what's been so great about having Charlie on as a guest?
Okay, because Charlie was around during the original CNBC after they moved from FNN. It's a conservative view with a heart. I love his writings. You know, I tweet out his stuff that he writes for the Post. It shows that, you know, someone who has a big stage is willing to, you know, come and share his ideas on a smaller stage. That tells me something about his spirit, that it's a giving spirit. And, you know, a lot of big names, they want to have, you know, millions of viewers every time they say something on the major television broadcasts. And, you know, Charlie's not the only one. You know, we have Peter Bookfar, who gets millions of views on CNBC, and Mark Newton and Mark Yusko. So there are a lot of guys out there that are, you know, very wealthy, very well known, that also come and, you know, give our little broadcast some nice, you know, credibility, that they would come and talk to us. They must enjoy it. You know, it's fun for them to come, and maybe it fine tunes them. You know, it's kind of like trading, Blake. You know, when you do your analysis and you're doing it over and over again, you become a better trader. So, you know, if you're doing there's nothing like practice to make perfect. Practice makes perfect. So, um, and I like Charlie, you know, so it's always fun to have guests that you like. And, you know, even though maybe you're from a different political bent. And you know what, I was talking to Blake, you know, a friend of mine, and he, you know, he's a Republican, buddy of mine from school in Chicago. And, you know, I told him I brought in people with, you know, different political views with me. In fact, Blake, you know, when that thing happened at the Capitol, I had that one guy on. I forgot his name, but he was behind Stop the Steal. We have an interview with him, so he was very, very, you know, on the other side. Huh?
I'm sure heated and opinionated.
But you know what? At the end of the interview, I said, you know, what we just proved is that people could have polarized opinions and still be respectful to each other, and not raise their voice and talk over each other. And you know, I pride this interview format as being an open format, and I show respect, and I expect everyone who sticks around for these interviews to do the same, whether you agree or not.
Yeah.
Is to show respect for our guests, because they're not getting paid to do it.
No,
Maybe they'll get.
They're coming in here and
Yeah.
giving their opinions, and
Yeah.
it's great.
So anyway, you know, just like, you know, you guys could razz us, but when we bring guests in, you almost have to be on your, you know, better behavior when we have guests here. If you invite a guest to your house, you don't insult them, do you?
No.
So
Yeah.
that's
Hey,
the end
hey
of my
guys,
lecture.
really quick, if you're if you're on Twitter, if you don't mind retweeting my tweet, it'd be great. Just because I know for Charlie, it's awesome, and it's great that he comes in. You know, it's nice to. I've been listening to the guy for 20, you know, however many years. I mean, 25 years.
125.
You know, just me personally, he's awesome. So yeah, if you guys are on Twitter and you can retweet that, that'd be awesome, because I just put out a tweet. But look, you know, Forex Gal just mentioned the Duke of Edinburgh, and that's Prince Philip, right?
He passed.
He did, and I mean, he lived a great life, 99. And if you're outside the UK and you watch The Crown, like a lot of us, you feel like you know the guy. It's just, it's sad. I mean, it's sad to me. I really, first of all, I really enjoyed the show, just because, you know, it's like for us Americans, it's, you know, being educated on the monarchy, whether you agree with it or don't or whatever. It was entertaining nonetheless, but it's like you feel like you know the guy, you know, and it's sad. It's sad to see that he
Tom
passed.
Petty wrote a song, Blake. It's good to be king, if just for a while. Anyway, great song. Check it out. He was prolific. I mean, you know, I keep finding songs that I never even knew he wrote. He was a real prolific writer, but that's a pretty cool song. Check it out. It's good to be king.
I will. And by the way, I caught your clip of you singing, and that was awesome. I had to just mention that before I go into this. I have to go into some analysis going into today, guys. We've kind of messed around a little bit, and it's Friday, and we got Canadian jobs reports coming. So it's let's
go, bro.
Take a real quick look at the markets. Now, I just want to point out a couple things that I'm looking at. First and foremost, look at the dollar yen and look at the massive bounce from 109.
Yeah,
this is big, guys. If you can see, I
agree, man.
Well, it's huge because the 109 level, and I can't remember if ForexAnalytix tweeted it yesterday or I tweeted it, but that is a multi-year trend line right there. But I did mention it in the blog because I'm like, if that breaks, that means gold's going to break. And if that doesn't break, gold's not going to break. And that's exactly what happened. Well, I was actually thinking that the dollar yen might actually give in and we were going to see some false breakout, but that didn't happen. I woke up this morning, I'm like, oh shoot, we got a huge bounce. And I'm like, and the first thing that came to my head was, I can guarantee you anybody who's bullish gold is really bummed out this morning. And lo and behold, gold rejected 1760 as the dollar yen rallied aggressively. And if you look at the 10-year yield, 10-year yields aren't giving them up, man. They look, you know, pretty strong here. And Taki's in our chat room, you know, I've been looking at this channel, but you can actually look at it like this.
Yeah.
And it's a bigger channel.
See, you may not have seen that unless he brought it up, right?
And then you know what? You go into the chat room and look, guys, this is just so you guys can see. That's
the advantage of a community. You almost have a mastermind going with everyone contributing. You know, like 100 eyes are better than 2, especially if they're educated. And you don't know how many ideas I get from other analysts and traders that I wouldn't have seen on my own. So, I mean, that's what the community is there for.
So I got up late this morning. My alarm went off a little late. This is good morning, everyone. That's, you see it 4:04 in the morning. It's 5:19 right now. So it is, you know, by the time I got my coffee and I sat down, it's been a little more than an hour on a Friday. This is our chat room.
Active.
After for the last hour.
Yeah. Look at all those looks.
And
Yeah.
here's Takis right here. Oh, wait, where's Spicy at? And I'm like, you know what? I was looking at it a little different. I was looking at that channel. That's what he pointed out. Remember, I was looking at it like this, and I'm like,
Yeah.
he's right, you know? And guess what? You know, yields held there pretty strong. And I was viewing more of a, you know, narrower view, and he was taking a little bit wider view. And you're right, Dale, wouldn't have seen that. I wouldn't have seen that unless, you know, it was pointed out in our chat room. So, that's just the importance of the community that we have. It's really a great community of traders, and you know, we all look out for each other. We try not to talk politics. We try not to talk
Religion.
Religion. We just, you know, try to talk markets.
God bless you for not talking about religion.
Well, you know,
that's a joke. Huh?
Well, you know,
I knew Volgy would like that one. God bless you for being an atheist, Volgy.
I got it. Sorry,
oh my God, Blake.
Friday. Hey, Steve. So, hey, let's take a look at the dollar Canadian ahead of the Canadian jobs data. So, I have to point this out, and we have to talk about this really quick. The dollar Canadian is still, we could actually have a strong Canadian jobs report. We could slump through this support, but I still think while we're above 125, you just have to be really careful being on the short side. Now, I think that we are developing a big inverted head and shoulder pattern as we come out of this big descending wedge. So if you don't see the descending wedge, let me just reiterate. This is a descending wedge, and we've basically been breaking out of that descending wedge for the last, you know, several weeks. And I'm going to tell you why we haven't had any move higher out of that wedge. If you haven't seen it, the stock market's at all-time highs. So when the stock market's at all-time highs and volatility is low, it's going to be very difficult for the dollar Canadian to move. Let me show you something. Probably one of the charts that I've paid attention to most of my career in currencies, which by the way has been since 2001 when I switched over from trading equities to currencies. One of the biggest relationships you're going to find out there, tight relationships, is the VIX and the dollar Canadian.
Yeah, it used to be much better, to be honest.
Well, yes, I agree with you, but it's still very responsive when you see spikes in volatility. It is. So when volatility spikes up, the dollar Canadian is one of the first responders. Always has been since I've traded currencies, and probably always will be, right? So when you see a spike up in VIX, you're going to see a move in dollar Canadian. So if you wonder why the dollar Canadian hasn't broken out of this, you know, this wedge, its volatility is low, stocks are high, it's compressing volatility, it's not going to allow the dollar Canadian to move up. Plus you've had crude oil rally from, you know, 0 to 60, but crude oil is looking a little toppy, stocks are looking a little toppy. Well, I don't know if they're looking a little toppy, but we are actually at pretty key resistance up here at the megaphone resistance, right? So if the stock market starts to pull back a little bit, or volatility starts to pick up, or crude oil starts to come down, the dollar Canadian is going to move higher. And so that's why I think any dip, even on a strong Canadian jobs data today, we dip down here, you probably want to be long. Look at the euro dollar, absolutely getting crushed. A lot of dollar bulls a lot of dollar bears last night. A lot of dollar bears. Why did we have a lot of dollar bears in the market? Because the euro dollar closed the day above the 200-day moving average. The dollar index closed the day below the 200-day moving average. There are a lot of dollar bears very, very excited last night. Gold was going to break out. Dollar yen was going to break down. Look what's happening right now.
That 92 area in the dollar was big. That's where we accelerated.
You know what? Here's the thing that I think most dollar traders are not paying attention to, and they forget because most traders have ADD. So they just, they're like,
Yeah.
oh, yeah, today it was important, or yesterday it was important. Today I totally forgot about it. The biggest part of the dollar equation right now, because it's not equities, because equities are stronger. It's not gold, because gold's stronger, or because gold's stopped moving. It's bond yields, and yields continue to stay strong. Look at the 30-year. I mean, do you see any pullback in the 30-year yield as we're consolidating right below the 618? No. How about the 10-year? I know we just talked about it, but no. So look, if you're a dollar bear, you got to look at yields. And if yields aren't going down, the chances of the dollar strengthening from this point is good. And I'm telling you, a lot of people are really, and one of the other things, guys, that you if you guys are dollar bearish, stocks are at all-time highs and the dollar's holding up. What happens if this happens? What happens?
Risk off. Yeah.
We see just a little bit. It doesn't have to be a lot.
Yeah.
We could go from 4,100 to 4,000. You know what's going to happen with the dollar?
Yeah.
The Aussie dollar is probably going to be trading at 75, 74 cents. Right?
Yeah.
So you guys just be careful with the dollar here. Now, we do have Canadian jobs data. I'm sorry, Steve Stelios. I just realized what time it was. I didn't want to take all your time. Good morning, gents.
Good morning.
Sorry
okay. When you're on a roll,
Unforgivable.
we like you.
When I'm on a roll.
Only
When
then.
I'm not, and I'm like, I got nothing. All yours.
One thing I wanted to mention
Yes,
comes out of Italy, and Draghi's government are now. I'm reading that they're preparing a new stimulus plan. I think it's going to be like 30 billion euros.
Why not?
And they said that they're going to need to borrow quite a bit more than expected, which is
Sure thing.
going to be 40 to 50 billion, and that's going to push their deficit. Remember when they were fighting about 2.04 or 2.4 or something like that? Well, it's going to push that above 10%.
It's okay.
So there you go. It's still a good
fine.
number.
Sure.
All right. Well, we got trillions and trillions and trillions coming in. So let's buy ourselves out of this mess. Hey, so guys, we do have producer prices coming out too. A lot of people don't pay attention to PPI, but I think, as I've mentioned all year, data is starting to matter, and it is starting to matter a little bit more right now. And I think we need to pay attention to economic data because, especially data like producer prices, because as producer prices start to and continue to rise, it's eventually going to make its way to the consumer because,
The year-on-year forecast is 3.8, by the way. Just
it's a very
for
good
producer prices.
Yep.
Yep, right here, 3.8%. So do you think that if producers are getting squeezed, do you think that's going to make its way to the consumer eventually?
It has
No,
to.
I think they're good
Don't think
people
so.
and they're going to fund the difference themselves.
That makes a lot of sense to me too. That totally makes a lot of sense. They're just going to eat the eat the margins and
Exactly.
say, "You know what? Screw it. We're not passing that along to our
Yeah.
consumers."
I mean, we should help.
we should
it's
help.
one of-
we should
it's one of the
help.
best-
Yeah.
It's one of the best leading indicators for inflation. So we definitely need to keep an eye on it.
All right, guys, we got about 30 seconds. So Canadian data looking for 100,000 jobs to be created, which, the previous, we were looking at 260,000. So, but I think it's the unemployment rate going down where the market's really going to be paying attention to. It's supposed to go down to 8%. I think Canada's probably going to beat these numbers, but I'm the worst jobs number person ever. So we'll see. Yeah, we'll see. All right, guys, data's coming out. Stand by.
Let's see what we get.
Here we go. There it is. No, it isn't. Here it comes. There it is.
No, it doesn't.
Oh, strong data. Look at the Canadian.
300.
Boom.
Wow.
Boom, baby.
7.5% unemployment. That's good.
7.5% unemployment. It's good data,
And
guys. Good
Dollar
data.
CAD
Good.
has to sell off on this.
Huh?
Dollar CAD has to sell off on this.
It has to.
Yeah.
It
has
is.
to. It's
It is.
303,000. That's exactly what, look, the market's looking for, well, it was looking for worse data, and we got good data, right? We got good data.
Yep.
So how about
Well,
PPI? What'd that come out at? And why is...
It's not out yet.
Oh, okay. Well, there we go.
Steve, Stell, if you want to take a few minutes to, continue. Charlie's not here yet.
Okay.
We'll give him 5. I've sent him
Yeah,
messages, so we'll see.
Yeah, and you know what I'll do, Steve? I'm going to let you take over. You get to show some charts because you hadn't been able to show your charts recently, and I don't want you to feel left out. So, hey, but before I go, I want to say this. Thank you guys for all of your continued support. Really appreciate it. Here at ForexAnalytix, we got a lot of good stuff in store for you coming up here in the future. So, continue to tune in. And if you guys are listening in via YouTube, please give us a thumbs up. It helps the algorithms. So really appreciate that. And by the way, the dollar Canadian, just so you guys just continue to watch it. Look, the dip
Spiking.
Yeah. Well, it spiked lower. Everybody's like, oh,
Trying
great
to come
data.
back.
Man,
Yeah.
if I was short dollar CAD and I was looking at this price action, I'd be worried now.
Yeah, of course. I mean, you buy it on that great data, and then all of a sudden it's kind of up in your face. So, I think probably the bigger worry right now is that you got stocks at these levels, and you got to.
Okay, Charlie's here.
What the hell did they do with the data?
Yeah, it's not out yet. Maybe they're looking
The
for the
PPI
negative.
data.
They're
Yeah,
looking
I don't
for
know.
the negative sign.
Maybe Charlie's got some better.
They're trying to cook it. It was too hot to post.
Oh, that's
like,
Greek
no, we can
dad
post
humor.
4.2%.
There's nothing worse than dad humor, and I think the only thing worse than dad humor is Greek dad humor.
Yeah.
Okay.
There you go.
So yes, all right. So Dale, we're gonna let you take over, guys, gals. Thank you so much for tuning in with us. Have a great interview with Charlie Gasparino. We're all looking forward to hearing what he has to say. And remember, visit our sponsor, Pepperstone Securities, one of the largest FX brokers in the world. You can open your account here. There's me and Chris talking markets, so you know what their head of research, who he is, and what he's like. All right, guys, I'm gonna let you go. Thanks, Dale.
Have a great weekend, Blake.
Enjoy the interview, and we'll
Thank
be
you,
back
Steve.
in 45 minutes.
Welcome back, Charlie Gasparino.
I'm just trying to figure out. I have to do this every time I
Yeah, the video, start video.
start video.
And I'm going to share my screen and bring
All right,
up
I'm in.
some.
I'm
Okay,
in.
you're there, and I'm going to be showing some charts while we're talking, Charlie.
Okay.
Thank you for coming back. I read all the stuff that you sent to me, and so we have
Nice.
some nice topics to discuss. Why don't we start with spending money and the infrastructure bill? First of all, 1.9 trillion. Are the Democrats going to be able to pass this without any Republican support like they did on the rescue bill through reconciliation? Or do they need some support to do this?
Now, I think the Senate parliamentarian, I mean, it's all about timing, right? So
yeah,
you could do reconciliation like twice a year or yes, there's a number of times you can do it. They haven't hit that limit yet, so they can pass this through reconciliation. And my guess is they will. The question is, what does Joe Manchin do? Does he usually caves at the end for these Democratic proposals, but he does it with a wink, with a twist to it. So he may say, "Oh, I only want, instead of 2.3 trillion, I only want 2 trillion, and don't raise the corporate rate beyond 24% instead of 28%." So he'll get something to protect his because he's a Democrat in a red state. He'll get of West Virginia. He'll get something to show his quote unquote moderate bona fides. But this thing will go through.
Who would have thought he'd be wielding this type of power coming into this.
Well, the minute the Republicans did not win those 2 Georgia Senate seats, and that's
right.
on Donald Trump. I mean, he just distracted the voters there so much, saying that the election was rigged. His base stayed home. It's mathematically proven but pollsters have done this, shown where he was strongest during the election, where people just did not vote in the runoffs. And Stacey Abrams did an amazing job getting out the other side of the vote. He cost them. He's the reason why we're having all this spending blow up, because he didn't do the right thing for his party at the time. So.
Okay, what do you think of the composition? I mean, it's not all infrastructure. I know there's 400 billion for guys like me, the old geriatric population. That's not infrastructure. Those are, people just, on their in the 7th inning stretch for another couple innings.
I'm right behind you. I'm in the 6th inning, but here's what I would say. This is where you're getting a lot of sort of static among the hedge fund traders I talk to about deficits and worried about, this, listen, there's who knows what's going to happen. I mean, the U.S. is the tallest midget in the room at this point right now. There's not a lot of places to park your money. But, if they could, there is a theory out there that when this thing starts, when the markets start to digest this thing, rates will gap out like dramatically. And that could have a huge impact on the budget deficit, meaning that we are paying just that much more of the deficit is now going to service debt. And if you get into that sort of spiral, that's when, you could have rates spike dramatically, and it could be a real problem for the economy. And then the question is, does the Fed at that point come in and start suppressing rates? And a lot of the hedge fund guys I talk to think that's a real possibility if you get a 10-year that starts spiking above 2%. Right?
Okay.
Yeah.
All right. So you know what? Bringing that up, kind of, is a great segue to talk about Bill Huang, right? And you wrote about it. In 2 days, his fortune melted away. Charlie, what I find interesting about this is, and it really happened because I forgot the shares that got him in trouble, but it was really just a secondary offering that made the, I learned that from reading. It was a secondary offering.
Mainly, there was remember that secondary offering?
High leverage, ultra high leverage, but secondary.
This is what happened. My producer Lydia Moynihan did great work on this, because Bill Huang was a devout Christian fundamentalist. Apparently, he gave a lot of money to King's College, which is a newish Christian school in Manhattan, which my producer went to. So we had an interesting insight into what he was doing, how he was marrying his philanthropic efforts for Christian charities with his with his family office hedge fund. Some of the reporting she did showed that about in 2014, the college she went to did a review, a report on him and other potential donors. They found out that in 2014, his net worth was less, and maybe significantly less, than $1 billion. It had grown since 2014 to before it blew up, and it depends on whose numbers you look at, anywhere between 10 and 15 billion. So that's how much money and how fast he made. If you calculate that out, because this was his money, he was not accepting outside money. He had a net worth that was at least equal to Steve Cohen, to Dan Loeb, surpassing Bill Ackman. I mean, he was literally one of the richest men in America before that thing blew up, because that was his money. And then what was the fatal mistake here? Well, obviously, I mean, he was, engaged in leverage, and he was doing, listen, you guys.
Yeah, he didn't read my 10 commandments. And number one is use less leverage. I even have a little tune I wrote about that, because, it's a double-edged sword. So
Well, it wasn't
the
just
market
leverage.
give it, and the market give it away, take it
But
away.
it wasn't
right?
it wasn't just leverage. It was like leverage on steroids. You know,
Right.
he did, and by the way, lack of diversification I mean, simple shit, right? So think
Yeah.
about it. He did one trade with leverage trade with 5 different banks. Okay.
Yeah.
The biggest one was Credit Suisse. He was engaged in a swap where Credit Suisse would somehow wouldn't hold. Credit Suisse held the stock. I mean, it was this basket of stocks, including Viacom, right, and Baidu and Discovery. Those were in there. Those were the baskets of stocks and more. And he was doing that with 5 different banks. No diversification. So if a bunch of those stocks imploded, they imploded 5 ways. And that's what happened beginning when Viacom did a secondary. And
with Viacom, yeah.
And so Viacom does a secondary. Obviously, it saw its stock, thanks to Mr. Huang, go up from like $50 a share, because I covered a lot of Viacom's, you know, all the whole thing with CBS and what they were trying to do with to merge the two together. It was like a $40 stock, $30 stock. Then it started to explode on all this like irrational exuberance about streaming and everything. And when it's high as 100, Bob Bakish, the CEO, is a smart guy. He says, "All right, I got 100. I gotta raise some capital." He does that. Right. The market freaks. It goes back down to 40, and that was the cascading event with that. And I think Discovery fell with it because, you know, they're both in that sort of same space. And they were both pumped up for the same reasons. And that set off the chain reaction where he couldn't meet margin calls at any of the banks. And they had to sell those. Then they start selling the stocks, and it's sort of, the stocks go down even further. It's like it was really amazing. It was amazing in the sense that, you know, everybody says it's complicated because it's swaps. And I'm not like an expert at the swap market, although I've read books on it. You know, I maybe know more than your average reporter. But, you know, when it really came down to it, it was about leverage, as you said, and lack of diversification. He was literally in the same trade 5 different ways on steroids. I mean, that's just amazing.
You believe in the cockroach theory?
Maybe, if you tell me what it is.
Well, you know, if you see one in your house, you know there's more.
Well, yeah, right? That's the other thing. I just think it's fascinating that the banks themselves didn't care as much. They were just, you know, sucking.
Yeah, where were their compliance officers and margin people?
I'll tell you, that's a great point, particularly at Credit Suisse, which was holding the biggest bag of you know what at the end. I spoke with someone who was very senior at Goldman Sachs, particularly at the in the prime brokerage department, which works out these deals with the Bill Wongs of the world. I can't say the guy's name, but he's a major player and he doesn't work there anymore. And I said, "What do you make of this?" He goes, "You know, Charlie, here's why Goldman was out first. You don't earn nickels to lose dollars." And that was always the mantra of the Goldman prime brokerage when they were lending to people. If you notice, they got out totally unscathed, or largely unscathed. You know, particularly compared to how much money they probably made off of them. The minute they smelled that there were 5 people in the room with the same trade, you could just imagine that the Goldman guy that was in that meeting that Credit Suisse held to try to get an orderly unwind was, you know, texting his buddies like, "Sell everything." You know what I'm saying?
Yeah.
And that's just the way Goldman and Morgan do things. And they got out, you know, relatively unscathed. I hear it's immaterial to the balance sheet. They're putting that out there. I'm pretty sure it was. And, you know, he, you know, and the other guys were like, they just can't play. You know, you don't go to a gunfight with a knife in your hand. You know what I'm saying? You know what
it makes me think this, that if we can have a blow up with the S&Ps and most market indexes at new highs, it makes me wonder what else is at the bottom of the ocean should the tide wash out, go back out to sea, and we have a 10 to 30% correction in the market, which will come. I don't think we're more than a few months away from something like that. I'm not sure the catalyst, but if it can happen in an ultra bullish environment, how many Bill Huangs are out there if the market falls? That was only 2 or 3 stocks that got hurt. What if there's a general market sell-off, Charlie? Do you suspect that there are many, many more, bombs where the fuse would be lit with a decline in the market?
Yeah, well, I mean, remember, just not too long ago, we were talking about GameStop and how it almost tanked a bunch of hedge funds, including Melvin Capital, run by a really smart guy, Gabe Plotkin. How did a smart guy like that get caught in a short squeeze? By the way, it's all these sort of, there's lots of talk about how people like Huang were on the other side of that short squeeze, not just a bunch of kids in their pajamas.
Yeah, it's hard for me to believe that it was just Reddit.
But if you think about it, how does a guy get that, get that exposed? He's obviously a smart guy, made a lot of money in past years. I hear he's doing very well now. But how does that happen? And some of it happens when, money is cheap,
Yeah, you wrote about that. Some of this lays at the doorstep of the Fed. You wrote
right.
that the
Fed,
it's just low interest rate policy is part of this.
Right. And it breeds like gamble, like people take risks beyond the norm. I mean, listen, everything's a risk. I mean, you walk across the street, you risk getting, hit by a car, right? I get that. Markets are inherently risky. That's what they're made to do. But when the Fed is sort of like encouraging, sort of, and for a time at least, making the consequences of risk taking not very severe, right? Because that's what happens when you get low interest rates. You can keep borrowing and do other stuff. People let down their guard, and I think that's one of it would only be logical that there are 5 Bill Huangs out there.
Yeah,
that's logic.
Multiply that. This first time I saw you write about Bitcoin, Charlie, and wrapping your head around it, and you were talking about how you can see how it makes sense, especially as a hedge against a weak dollar.
Well,
I've seen it go. I'm not sure if it performs better with a weak dollar or a strong dollar. I've seen it perform and not perform in the same environment. So,
Dale, I was making a different case.
Okay.
Listen, I was a guy that was, completely skeptical of crypto and this whole movement. I
just don't understand it.
I didn't quite understand it. I can't tell you how many people I sat down with that are pretty big in the field that tried to explain it to me, and I was just constantly skeptical about it and then a light switch, dawned on me one day. I must have been running or something, and I just realized that if you step back, and then some of it related to GameStop. When Vlad Tenev, the head of Robinhood, was talking about instantaneous settlement. Why do we have to wait 2 days to settle a trade? Why can't we settle it in a second? Okay. And I started talking to hedge fund guys. They said, well, just so you know, if it's instantaneous settlement, there won't be any short selling anymore because you need 2 days to locate stocks and stuff. That would be bad for the market. But it made me thinking, why do I have to go through 40 different levers to buy a house? Why are all these checks and balances if you can do it instantaneously? If there's a technology like the blockchain to do it instantaneously, when you start getting your hands around the blockchain, and then you think, okay, what is the currency of the blockchain? Well, the currency of the blockchain is simply something that can be created, although there is a limit, a limit to it. And then on top of that, you say to yourself, what is the limit to the dollar in this system? Printing the dollar.
There is no limit.
There is no limit. There is no stopgap. And so then when you start looking at it like that, I became much more of a believer in Bitcoin.
Did you buy any?
No, and because I
don't
buy.
Well, then you're not a believer.
Well, no. Here's the thing, Dale.
Right.
I can't really buy stuff I report on.
All right.
I got to go to mutual funds and stuff. But no, here's what I'm saying. If you think about it, it could be a safer system than what we have now, which is just whatever you want to do. All of a sudden,
whoever's running the Fed.
Yeah.
Okay. All right. Well, why don't we talk a little bit about former President Trump considering a SPAC, which, I'm still not
Yeah.
sure what they are. It's just a way to go around the formal listing process. Is that the way you look at SPACs? I mean, it's like the wild, wild west, and he wouldn't be the first politician. I believe Paul Ryan, who has no business experience, raised a lot of money in a SPAC. So
That's interesting. I didn't know that about Paul Ryan.
Yeah, he has a SPAC.
He's a board member of my the parent company that runs Fox.
Okay.
And I'm mixed feelings with it. I mean, I think it's probably a good way to raise money for smallish type companies, right? That that need access to financing, that maybe don't want to go the traditional route where you have to.
Is it cheaper, Charlie? I mean, expense wise, it probably is less complicated, bureaucratic.
It is, because you're essentially skipping the whole VC process almost, aren't you?
Oh, yeah.
Or
it's amazing they exist. Yeah, it's amazing they exist.
Yeah, a couple layers. So, but the other thing is you're skipping layers. That it's the same thing with the 1 day processing or the 2 instantaneous processing of stocks. That those 2 days you catch a lot of mistakes, right? The VC process, the traditional IPO process, you catch a lot of crap that goes on in between, when you start raising money from a venture capital standpoint. And I'm not an expert at this. I talk to people that do it. To when you go public, there's a whole, it's like you're earning your what do the mafia used to say, make your bones.
The VIG.
You're proving yourself. So that's kind of the interesting thing from my standpoint, is that you skip those levers. Now, is that a function of technology, a function of progress, or is that a function of a bubble? Is what you got,
symptom,
we have to figure
a symptom. Out. Yeah, it could be a symptom. Like you could, have any of your tweets gone for $500,000 on an NFT? Or
that's what
any of your. What's NFT? It sounds like NFP, but NFT. I mean, what a speculative era we live in.
And by the way, you need some of those things to blow up to create the atmosphere where there's at least. So, you need to get rid of the moral hazard that exists when they don't blow up, where if there's no consequence to risk, you just keep taking more and more risk. And so when that happens, we'll figure out whether the SPAC craze is real or nothing. Now, we remember, everybody thought the .com thing was this huge thing where anything could be .com and make a lot of money.
Right.
Then it blew up, right?
Right.
But .coms, the tech companies are what's driving the economy. I mean, Amazon, went through the ups and downs and survived, and is now one of the biggest companies. So remember, there is a degree of creative destruction that goes on here.
Okay, I have a question I forgot to ask you earlier related to Huang. Did the whale at Goldman blow out more capital, or was Huang's bigger than the whale at Goldman?
The whale you mean JP Morgan's whale?
Oh, was that it? JP Morgan?
Yeah, the London whale you're talking about.
Yeah, the London whale, right.
Well, I'm trying to, I can do a quick Google search, but it sticks in my head that the London whale cost JP Morgan $6 billion.
Okay.
But that was a little different. It was an internal hedge fund, so to speak. It was, running, right. He was taking risk with the bank's portfolio, and then the market smelled, that he was on the wrong side of the trade, and they all ganged up on him and they squeezed him on his trades. This was a little different. The street didn't exactly mimic this guy's trades. They held. They
went with him.
They went with them. They held the derivative. You see, the derivative apparently was a basket of stocks that were highly leveraged. And so the street would have to sell, like JP Morgan, Credit Suisse would have to sell the Discovery stock, the Viacom stock, into a declining market. That's where they lost money. You see what I'm saying?
Yeah. All right. Well, I want to wrap it with this, something that's close to my heart. I worked for managers and bosses like Michael Solomon of Goldman. And, I worked Saturdays. So what's the beef? of all these reps at Goldman.
I think it's isn't it David Solomon? I could be wrong, but
I wrote down Michael, but maybe it is David Solomon. But you know, he wants people to come back into the office. You know, Charlie, I don't know about you, but you know, I've been working remotely for, I don't know, 20 years. I miss the days of being able to go into the office and collaborate with people. Don't you miss the days of going to the studio?
And I'm going. I'm going. Listen, I'm today is Freedom Day for me because I am. It's David Solomon. I was just
David. Okay,
making sure I wasn't losing my mind there, but I've written his name so many times. Yeah, I miss going to the office. I'll be going starting next week again. I'm in my 2 weeks after being totally vaxxed.
Oh, okay. Congratulations.
Listen, this guy is a good CEO. I mean, he brought the company back. He cares about shareholders. He and he's a little rough around the edges, maybe, but he knows what he's doing. And you know, the kids are just like, you know, this is a little bit of millennial angst here. You know,
yeah, there is.
You know, listen, I made this is what.
My best day for opening new accounts as a broker was Saturday. You know why? Because people are home. They're not they're not at work. They have time to think about their future and what they're going to do. So I think that David has the right idea to help his people become.
I'm telling you, in journalism, particularly when I was a print journalist, we didn't make anything. And we were just happy to have a job at the Wall Street Journal.
Yeah.
I worked every day. And like I would work at least 12 hours and work out for lunch and then come back to the office, leave there at 10. This was a daily grind that I did for years. Now, thank God I'm 60. I'm going to be 60 next year, but I don't have to do that now. But, you know, I still work really hard. I'm still like, you see what I do. I'm up early. I'm, you know, cranking away every day. I just don't understand what their, you know, what the big deal is here.
Yeah.
You know,
so maybe it's kind of a non-story that's really about ethics, values, and you know what it used to take to be successful.
I think it's a story in the sense, and this is how we wrote it, and I wrote it. It was a story in the sense that it was the generational divide on what is a problem, how much time you should spend at work. I think that's because it's not just happening at Goldman; this is happening at all these firms. And by the way, there's a competition for talent because. You know, these kids are really smart. They can go to tech. You know, they can. They're, you know, so there's a give and take among the employees versus the firm on how to, you know, how do you retain talent and what you should give as a benefit to retain that talent. And it looks like these kids don't want to work Saturdays. That's one of the benefits.
Yeah, I wonder what they want to do. They have some kind of experience besides work, right? You know.
Sounds that way to me.
Yeah. So Charlie, this is always a good experience for me to talk to you and for our community to hear your thoughts.
Yeah, I love doing this. I think it's an educated 15 minutes or 20 minutes of my day. So
so I really appreciate you being here and enjoy you coming in every month. And thank you for continuing to send me your writings and your broadcast snippets from Fox Business. And I really appreciate our time that we have to talk about what you're focused on. And you want to leave us with anything you're looking at for next week?
That's a great question. You know, I am so busy right now covering Major League Baseball's boneheaded move to get out of Atlanta and the business implications. And I'll be on all day talking about that again.
Okay.
Because believe it or not, it's a big business story. They just pulled $100 million out of the hands of Atlanta because of this law. And, you know, the other part is, I don't think people understand just how much pressure baseball was to be political here. It's a game. It's a business.
It happened. Yeah. Happened in the NFL and in NBA everywhere now.
But Rob Manfred, and this story is going to come out. I've been writing it. At the Manfred, the commissioner is going to. I mean, you'll see in some of this reporting, he thought the least political avenue was to get out of town because of the pressure that was being put on him by activists like LeBron James and Stacey Abrams, and you know, I heard Al Sharpton was in the mix too. So it's like from a business standpoint, he looked at it and said, okay, I can either have the game in Atlanta we really want to celebrate Hank Aaron's, the late great Hank Aaron this year, but it's going to be, but it's going to be a political show about this Georgia voting law, and all they're going to do is break my chops about whether I support it or against it. And LeBron James is going to go public, and there's going to be broadcasts. Now we should point out that Stacey Abrams said she wanted them to stay, but she's kind of speaking out of both ends of her mouth. She wanted them to stay, but she wanted him, Manfred, to support this, to come out against the law, the Georgia voting law. You think about that. You're a business guy. You got to like put together the All-Star game. You got to get fans in the seats probably, and you got to like take a political position. I mean, it was just untenable for the guy.
What a beanball at the beginning of the scene.
It's just
more
crazy.
than a brushback, right?
Dale.
I mean, that was, yes.
Hello, Charles.
Hey.
I don't know, but for some reason, I seem to have guessed the numbers right. We finally got the BLS numbers for PPI. It's 4.2% year on year.
Oh, that's a big rise. Okay.
Yep.
Well, so if you're worried about the long bond blowing out, maybe that's the reason. What's the 10-year doing right now?
10-year last.
Let me see.
I got it here. 168, up 6 and
168.
bips. Yeah.
I can tell you that a lot of my sources, hedge fund guys, sophisticated guys, think the Fed's going to suppress rates, going to have to suppress rates because you just can't blow out. The Democrats want such a spending bill. I mean, think about it politically. If you're Joe Biden, you got a 1-year window to be in the majority if you don't spend like crazy and buy votes. So then you got your 51 member majority. You got to do it, and you got to do it big, okay, to keep that majority. That's because the chances of the Democrats usually in off-year elections keeping the House and the Senate are very low. So remember, he's got a short window, and the theory is he packs everything he can within that period. And then if he does that and the markets start going nuts, if the bonds start spiking, the yields, well, then you need the Fed to come in. And Powell said he doesn't want to do that, but who the hell knows? If
Powell has said many things, and he has done the opposite multiple times. So
what they'll do is they'll have Powell and Yellen and Bernanke holding hands and singing "Kumbaya."
Yeah, I think you're right. Yeah, I think you're right.
He did that.
And the other thing is this: he's up next year. So if he doesn't do it, they'll just replace him with someone that will, right? Lyle Brannon.
Like an Arthur Burns.
Arthur Burns. It's great that I actually remember who Arthur Burns was. That was Nixon's
Me too. The
guy
fact that I remember anything anymore, Charlie, is amazing to me. Okay. I've old timers. Anyway, thanks, Charlie, for being here, buddy. Appreciate it.
Dale, talk to you next month, hopefully.
All right.
Gotcha.
Appreciate you being here, Steve.
Steve, thanks. Appreciate it.
Yeah, great week, everyone. And you could join the whole team on the Morning Edge in 12 minutes. That's a wrap, everyone. Have a great week. And remember, don't just count your infrastructure bills and all the government spending. Pretend they're blessings and count your own. And I'll see everyone on Monday. Have a great weekend. Adios.